Trump transition. They don't reflect necessarily the views of Hudson Bay Capital or the Manhattan Institute. It's purely my own impression of things. Now that said, I think we're to frame this paper the way that I'd think about it is to say that Donald Trump won the popular vote for Republicans for the first time since 2004. He delivered both chambers of Congress and the White House. He has a very strong Democratic mandate for pursuing what he said that he was going to do on the campaign trail, a major portion of which is to restructure the global trading system to make it more fair and reciprocal to Americans. His supporters, President Trump, they tend to think that the system is unfair towards American workers, and they've talked about a variety of things they'd like to do to try and make it more fair and reciprocal. But I think there's a lot of confusion in markets about exactly what the tools available are and what do those tools do and exactly what's going to happen if we use them. There's certainly been a lot of what I would consider to be politically motivated hysteria about them, about the tools. And I think that it's important to understand the range of options that are available. And so the way that I'd conceptualize this paper is to think about it as sort of a catalog of what the options are, right? If you want to start restructuring the global trading system, what are the tools that are available to you? How do you use them? What are the side effects that might happen from move over time to balance trade and equilibrate international trade, right? That hasn't happened, right? So the question is, why hasn't that happened? The answer, I believe, lies in the fact that the dollar is the global reserve currency, and there is, in fact, more than one model for determining exchange rates, right? There's the trade model that I just discussed, but there's also models for international finance, for investing, where currency values are a function of the investment opportunity set in each country, right? And in that world, currencies move up and down in value because investors want to own the assets, right? Now, I think where things get out of whack is that savers wind up buying dollar assets, reserve assets, U.S. Treasury securities, not necessarily because they like the return profile of the United States. They think the yield is a little bit higher in this part of the yield curve and a little bit lower in that part of the yield curve in another country, and that there's a good reason for owning, this U.S. security over that German bond or whatever. Like all the way to the limit, you get to a dilemma of a tipping point, right, where bad stuff happens. Look, that's not plausible in probably in my lifetime, but certainly not in the near future. In sort of U.S. financial markets. But what this inelastic demand does do is it creates lots of demand for dollar assets that is just a function of trade between third countries, right? It has nothing to do with the United States, right? Or it may have to do with other countries managing their currencies, right? Manipulating their currencies, whatever the reason. That pushes the dollar up over the longer term, and it creates persistent trade imbalances and prevents the dollar from depreciating in a way that would serve to balance trade over the longer term. And as a result, you get these persistently larger and longer term, trade deficits and current account deficits, which have had, sort of severe economic consequences for manufacturing and the export sector in this country. And I think that this has driven a significant portion of some of the world without having to move military assets, right? And so we can sanction people, we can cut them out of the global trading system. We can bring economies, like we did to Iran, and we have to North Korea. We can bring them down to the ground, right, and really impoverish them by using the financial sanction system that's built up around the dollar and the Treasury security as the global reserve currency and asset, right? And that ability to impose our will in other countries is a function of us being the reserve asset, right? So the real trade-off, I think the trade-off is often presented as one of lower borrowing yields, right? I don't see that myself when I look at sort of economic data. When I look at global financial markets, I see the real trade-off as one of being the ability to have enormous power globally without actually using military assets through the financial sanction system. If you want to look at PCE inflation, which the Fed targets, and of course I've written extensively about that, but if you look at PCE inflation, it went from slightly below the Fed's target to even further below the Fed's target over this period. The reason we didn't have any material inflation for what was actually, a substantive shock to policy is because, financial markets moved and currencies offset this. And in the end, it tended not to matter. And of course, there's all sorts of implications for that, not just for inflation, but for who bore the burden of this, right? And so if you get to a situation in which, Treasury is taking in revenue because of the tariff income. Prices domestically don't materially increase because the currencies offset them. But at the same time, the renminbi weakened even further. The net of that is that China's purchasing power effectively went down. Chinese consumers effectively became poorer because their currency went down. At the same time that whoever is more, as economists would say, inelastic, bears the tax. Someone who can adjust their behavior to avoid the tax will not bear the tax. Someone who can adjust their behavior to avoid the tax is forced to bear the economic burden of the tax, right? In these academic studies, what you get is that goods that China would have to absorb the increase on, they wind up relabeling them as Vietnamese or Mexican or whatever, right? Goods that the U.S. consumer is highly inelastic on and that China knows consumers will have to absorb the tax increase on continue to be labeled as Chinese. That creates an insurmountable empirical problem in the microeconomic data for correctly identifying which goods are hit by the tariffs and which goods are not hit by the tariff. And so I think that causes a major error in the conclusions of these papers. And of course, I think that there's a few other things wrong with this literature as well. I think that they study some short-term effects and when they should be thinking about some various long-term effects. I think they also find, a couple of them find that the pass-through is, much more for the wholesaler than the retailer, that the importer sort of absorbs higher prices, but that they can't. But tax cuts on Americans were financed by taxes on China, right? So I think this is viewed as an overall very successful package when all these things work together correct. If you don't get currency offset, right? Oh, sorry. But if that happens, then, the ultimate prices experienced by Americans haven't changed very much, and so there's little incentive for firms to really move their supply chains quickly or aggressively, right? And so you might wind up not having such a huge impact on the trade balance because things haven't really moved enough to incentivize huge readjustment of trade flows because the ultimate price changes were offset by the currency. However, what you've done is you've improved burden sharing, right? And so if the U.S. is providing reserve assets to the world, and that has exerted a significant downward pressure on our tradable sector, on our export sector, on our manufacturing sector, what you've done in this context where you've managed to raise revenue paid for by weaker currencies from other countries is you've improved burden sharing because the revenue that the government takes in that finances is involved in different types of activities. There's many, many different agencies that issue regulations. They're enforced with extremely varying degrees of activism. And so as a result, economists do a bad job studying regulations, but they're enormously important for how the economy functions. And they're important not just because they determine what types of activities get undertaken, but they make everything more expensive, right? You have to comply with the regulations, right? That requires significant legal and compliance costs. You have to engage in activities that increase the cost of doing business. Because you have to sort of spend money on stuff that you wouldn't necessarily spend money on. You're prohibited from doing lots of things. It can be very difficult to build a factory or a house, or whatever product it is that you're trying to build. And these things get into the entire economy, right? And last Trump administration, they had a rule called 1 in 2 out, which meant that for every new rule that federal officials wanted to put on the books in the Code of Federal Regulations, they had to take 2 old ones out, right? So they had to repeal 2 regulations for every new one. Who knows to make trade work fairly between trading partners? They respect intellectual property. They don't steal intellectual property. They do reciprocal market access. They don't do non-tariff barriers. All sorts. They let their currencies reflect the trade balances. All sorts of things, right? That you think that sort of China might have to do. And once they have this list, so you say something like, okay, here's what you have to do to be, a responsible adult economy. And until you do that, we're going to sort of do tariffs gradually and consistently and do something like 2% a month, every month, indefinitely. Here's a lift. Here's what you have to do to be an adult. Until you do it, you don't get treated like an adult. I think an approach like that would wind up giving tariffs very, very gradually, with very clear forward guidance, the type of forward guidance that this podcast is named after, right? and it reduces uncertainty, right? Which is why you use forward guidance, right? And I think that if corporations and investors have a lot of uncertainty over where things are going, Are we going to have tariffs of 0 or 60 or 10 or 20? When are they coming down the pipe? If it's just one time, then I can sort of just take a one-time hit and then look through it and not really change any of my behaviors. I think if they have clear and gradual forward guidance, it'll do two things. First, it'll reduce